the local officer does not necessarily know SBA. He knows there's an SBA out there, just like all of us. We know which bank is the right bank to go to, which bank is going to do your deal, or which bank is interested in doing your deal.
Yankie Markowitz, CEO of SBA Loan Group. Yankie is responsible for the firm's 504 and conventional lending departments and has helped facilitate over $1 billion in real estate transactions. Yes, that's with a B. $1 billion in real estate transactions and complex deal syndication. You'll hear all about this. Yankie's an executive board member for the Regional Business Assistance Corporation. That's an SBA CDC, and has been on the loan committee, which allows him to work on hundreds of transactions for the SBA each year. SBA Loan Group was founded a decade ago in 2012 to guide small business owners about the SBA loan program and how it works, right? Okay, and SBA Loan Group is recognized as one of the most reputable packagers of government small business loans to business owners throughout the United States. On tonight's edition of Mind Your Business, we will discuss the 7A versus the 504, which loan is right for your business, critical details of an SBA loan, and how it can make or break a loan application, and the advantage of a loan broker. With that intro, we give a very warm welcome, Yankie Markowitz. Thank you for joining me here on Mind Your Business.
You're very welcome. Thank you for having me.
Yes, special. So, my number one question, usually to people that run successful enterprises, is what's the backstory? Were you dreaming about this? I'm not going to say when you're in diapers, but how far back does this, what you've built? When did the vision start? When did the dream begin?
Well, I didn't grow up dreaming of becoming an SBA packager.
Okay.
That's for sure. I didn't even know about SBA till many years later in my career. I started off actually as an agent in New York Life. I would sell life insurance, and I primarily focused on estate planning and pension planning. Mm-hmm. So I was able to meet a lot of well-to-do individuals, people who had businesses, and I realized that they had a lot of excess cash. And what are they going to do with it? As being a part of community, my brother was in real estate, I started to syndicate different deals. Mm-hmm. And that went, Baruch Hashem, very well. Mm-hmm. So much so that I left doing life insurance and I went into real estate myself. And Baruch Hashem, that was doing very well. I built some houses, specifically in Connecticut. We decided to go into development. And then God gave us a gift, 2011. And showed us that he's the boss, and whatever you think you're going to do doesn't necessarily always last. I mean, thankfully, we recovered, but it was a blow. And from that experience, I learned, even though I still have real estate and continue to invest in real estate, I learned from that blow that I needed a business. I needed something different. And I started to put together different deals and syndicated different deals and try to catch a piece here and there. Eventually, it was around 2012, I'm going to say 2011, 2010, after the crash, we were looking to buy a DME business, a durable medical equipment business, and it was a lot of money. And the seller himself told me that he bought the business through an SBA loan. I think it was in the 1960s, if I remember correctly, or maybe 1970s. And I was like, oh, that's cool. What is it? I knew SBA. Everybody here heard SBA, especially in the business world. Yeah. Exactly. So we went on the search to figure out how to get an SBA loan. And the first thing I did was went to the community council in my community council in other communities. Nobody could direct me. One person actually sent me to a bank. I think it was a Bank of America, BDO, a business development officer. Now, sitting here today, I know that BDO did not know what he was talking about because we went down the road and found out that the business was not eligible. At least the way the business was structured, it was not eligible for the SBA loan program. So I realized there's a need for somebody who can navigate business owners, help them obtain financing through the SBA, explain the process from start to finish, and that's how we formed the company, or that's why we formed the company.
So that's how SBA Loan Group began.
Exactly.
What's the typical industries that you service?
So SBA has more industries that are eligible for SBA financing than there are those that are not. We deal with a lot of e-commerce businesses. Historically, and when we got into the business, we realized e-commerce is a very hard business to finance. banks do not like e-commerce, especially
because they don't have inventory and.
Well, a lot of them do have inventory,
okay.
but banks don't like to lend against inventory.
Right. Okay.
So if typically when somebody gets a line of credit, they're going to invest. It's going to be based off of their accounts receivables, not so much inventory.
Okay.
But the SBA allows for e-commerce companies, so we focused on trying to find banks that would do loans for e-commerce companies. We deal with manufacturers, distributors, wholesalers, attorneys. Believe it or not, we do a lot of business with attorneys, accounting firms, marketing firms. The list goes on and on. It's more of SBA does not allow you to lend to companies that lend money. You cannot borrow money to lend out to somebody else. And passive income investments like real estate. I get a lot of calls for real estate. If I could do it, I'd be very wealthy, but it's only for your business. But there's more businesses that are eligible than businesses that are not.
Wow. So like you actually mentioned, you listed off a number of businesses that don't have inventory but are professional attorneys,
Exactly right.
marketing firms.
Yeah.
They're professional. They don't necessarily have a tangible warehouse full of inventory, but that's still applied. That's
still worth it. SBA is a cash flow lender. So it's not necessarily about your receivables or your inventory. SBA looks at, can you afford to pay us back? There are programs for startups, but we don't deal with that. So I don't know if we want to talk about it, but we don't deal with it.
Got you. Yankie, how can people find out more information about your entire range of services?
Well, you could check us out on our website, SBALoanGroup.com, or you could call me directly. My cell phone number is very readily available. It's 718-744-7459, or you could call us at the office, 484-SBA Loan.
And again, if you could just please repeat the numbers.
Sure. 484-SBA Loan. That comes to our office. My cell phone is 718-744-7459.
If you're listening to this just on Sunday night, you're wondering, okay, when is this going to be up on YouTube? If you subscribe to our YouTube channel, you are automatically notified when it will go live. On YouTube, we're at 710 WOR, Mind Your Business. Again, on YouTube, 710 WOR, Mind Your Business. And everyone there is notified when the episodes go live on YouTube. Well, without further ado, going back to tonight's guest, Yankie Markowitz, CEO of SBA Loan Group. Again, Yankie, thank you for joining me here on Mind Your Business.
It's been a pleasure so far.
Thank you. I hope to continue that.
I hope so as well, or I'm going to walk out.
Okay.
Kidding.
This is one of those interviews. We know what goes on in the rails that people storm out, wah! And that, of course, that gets the ratings higher. So maybe if you do, no, I'm not giving.
Well, try it.
Okay, no. Yankie, if it's okay, now let's get into the specific programs that SBA Loan Group offers, and I should say through the SBA. Because I'm sure there's some differences. I mean, obviously there are differences. If something is called a 7A loan and something's called a 504 loan, there must be a reason why. One would think, at least.
Correct.
Yeah, okay. So perhaps we could spend some time talking about the 7A loan.
Sure. Throughout the past 2 years, SBA has been very popular with PPP and EIDL, but nobody knows that SBA has been around since 1950s. The 7A was created to help small businesses obtain financing because traditionally or historically, banks do not like to lend money to small businesses. So they created the 7A program. The 7A program, I would say, is the most flexible and versatile loan program that's out there. It can be used to refinance debt. It can be used to purchase inventory, buy a business, buy a partner, buy real estate for your business and get 100% financing. It's almost like the Swiss Army knife of loan products. There's many different uses for it. And typically when someone calls us up, that's the number one go-to loan that they would need because of its versatility.
Okay, so that's definitely an important preface to this part of the show, this part of tonight's program. The 7A is the most versatile. It's a Swiss Army knife, and therefore it has the broadest appeal because many businesses can apply and be approved through the 7A.
Yes.
Good. So now I turn to the 504. What is the 504 loan?
The 504 is more specific. The 504, in terms of conventional financing, it is the most comparable to conventional financing. However, it is specifically for fixed assets. So if somebody wanted to buy a piece of property for their business, they could use the 504 program. If somebody wants to buy heavy machinery for their program, they could use the 504 program. And in that program, you ultimately end up with two separate loans. In the 7A loan, It's a little bit different. We could talk about that a little bit more. But you end up with two loans, and part of the loan is fixed rate. Typically, or at least in today's day, it's a bit cheaper than the conventional financing. So the appeal of the 504 program is you can put down 10%. Anybody who is familiar with real estate investing, or they want to get a loan against real estate, they know 90% financing is a lot. And that is the main difference. The 504 program can get you 90% financing, but specifically for fixed assets.
So you could wind up getting a much larger loan through the 504 over the 7A.
Correct. So the 504 will be typically used above $5 million. 7A caps out at $5 million. The 504, let's discuss the differences, if we can, for a moment, between the 7A and the 504. So 7A, as I said before, Swiss Army knife, it is a fantastic product. Anything you want, if it's working capital, you're going to use the 7A. 504 specifically for real estate. In the 504 program, we're going to get 90% financing to buy a piece of property. In the 7A program, we can get 100% financing to buy a property. In 7A, you can also get 100% financing to buy a property plus working capital or inventory financing. In the 504, you cannot use anything. You cannot use the 504 program for anything other than a fixed asset, such as real estate or heavy machinery. So the main differences, I would say, is one, the versatility of the 7A versus the 504, and the fixed rate on the 504 versus the non-fixed rate on the 7A.
Now, if let's say a business is an owner-occupied type of business and has the real estate, which one would you say that they should apply for?
So that is a very good question, and that would depend on what the business is trying to accomplish. Every business has its own challenges. The business owner have their own risk tolerance. So most people who are in an inventory type of business, not a service business, they have to buy a product and sell the product. Money is valuable to them. So if they're going to buy a building for $4 million, and in the 504 program they have to put down $400,000, it's a simple calculation. How much money can I make of having that $400,000 in my pocket, reinvesting it in my business, growing my business further, than just parking it in the real estate? Doesn't mean it's a bad idea to park money in real estate. I park money in real estate. However, that $400,000 typically brings them X amount of dollars a year. So it's much smarter for that individual to use the 7A program. If he's somebody who's a service provider, he may not need capital unless he's going on a marketing campaign, or he's expanding and hiring new employees, or he maybe wants to open up an office, or they want to open an office in California. So in that scenario, they may use the 504. Okay,
so Yankie, before we continue on the differences between the 7A and the 504, just a question. Earlier in the show, correct me if I'm wrong, I thought you had mentioned that the SBA Loan Group does not specialize in real estate, and now you gave some examples that you clearly can fulfill a loan that involves real estate.
Yeah, sorry, I'm very confusing.
Okay, I apologize if I got
it
wrong.
Not at all. So when it comes to real estate, we do not deal with real estate investing. Many people call us and say, "Can I get an SBA loan? I get 100% financing. Sign me up. I want to buy the whole block." I wish, for myself included. I wish. Unfortunately, it doesn't work that way. What we specialize in is owner-occupied property. As an example, somebody is a wholesaler, distributor. They have inventory. They pay rent, and they pay rent every month. Good money. They can go buy their own warehouse through the SBA program, and that's why SBA created the program, so the business owner, he or she can go out and buy their own property and never worry about being thrown out, never worry about the rates going up for their rental agreement, and it's only owner-occupied property. So when it comes to SBA, we deal with owner-occupied property, and when it comes to conventional financing, we only specialize in owner-occupied property. Unfortunately, sorry.
No, but thank you for the clarification. So now, maybe we could still hold on to the difference between the 7A and 504, because there's so many businesses out there, the listenership of this show is primarily comprised of entrepreneurs, small business owners
Sure.
throughout the Northeast and actually throughout America through the various different channels, podcasting. And,
Sure.
And what, again, let's hold on to some of the differences, maybe even some examples of a type of a business or a type of a package that came to you that benefited from the 504 versus the 7A or the other way around.
Sure. So you reminded me of a story, actually.
Sure, please.
And we should maybe touch upon this because I didn't mention it before. The 7A program is between 10 and 25-year term. So if somebody came to us to buy a business or to purchase inventory, they would have the money for 10 years. If somebody bought a property with a 7A program, it would be a 25-year term with a 25-year amortization. There is no prepayment penalty in the 7A. That's one of the benefits in the 7A program versus the 504. 504 is typically a 10-year prepayment penalty. On average, though, I would say that in both scenarios, most people pay off their SBA loan within 7 to 8 years. Either that's because they moved on, they grew out of their space, or they became bigger and they need more financing, and then you call us again. So in the 7A program, when somebody wants to buy a business, it would be a 10-year term. If they wanted to buy real estate, as I said, it would be a 25-year term. I once had a client who called me up and said, I need two programs. I need the 7A and the 504. And I wasn't wrong. He was buying a business, which he needs the 7A.
Okay.
And he was buying the building that the business was occupying.
Okay.
The owner was retiring, and he wanted to buy both. And he already did his research, which I asked, why'd you come to me then? But he did his research.
You didn't complain.
I didn't complain, but I explained to him whether somebody did the research or not, it was explained by somebody else. When you come to me or to my company, we want to make sure that you understand what you're getting into and make sure it was explained properly, right? I can't take a chrayas, I can't take responsibility on someone else's explanations. So because he was buying real estate, and I explained to him, you're buying a piece of property. If we use the 7A program, you get a 25-year term. If we add on top of that the business acquisition, which, by the way, also included working capital,
Okay.
we're able to now take that 10-year term, because I said before, when you buy a business, it's a 10-year term, make that a 25-year term as well, which means the monthly payments were much smaller. And by combining the both of them, he had a much lower monthly payment than he would if he had the two programs together. Another difference is in the 504, as I said before, there's two loans that come into play. One comes from a bank as a traditional, conventional loan, and one comes from the SBA as a 40% portion. 10% is still required from you. The 40% portion is a 10-year prepayment penalty. Going back to 7A, on a business acquisition, on the 10-year program, there is no prepayment penalty. If you do well, God willing, you're able to pay that off whenever you want without incurring any fees. If you're buying real estate, there's only a 3-year prepayment penalty. And again, in the 504, there's a 10-year prepayment penalty. So both programs have their uses, and they're both fantastic. We do a lot of business in both programs. Question is, which one is right for that individual?
Yankie, this is, the good news is that this is going to go up permanently as a podcast and on YouTube, because there are many people that are still like, I'm kind of wrapping my head around it, but I don't fully get it yet, which is normal. I'm sure when you go through it with people, and which is why I'm going to ask you the obvious question. It is okay for a listener of the show tonight to call your firm to get, obviously, if they're interested in scaling, they're interested in acquiring, etc., they can call and speak to your team to get information.
100%. I always tell clients, actually, 50% of my job is education. I'm not a teacher. I'm not a great teacher, but it's to educate the public, educate my clients. Nobody knows it. I didn't know about this program. I heard about it. I went to try to get it. Couldn't navigate through it. You have to know what is expected of the program, what the program expects of you in the future. So 100% call me, call anybody in my company. It's
what
never
are the direct numbers? Yeah.
No, direct number is 484 SBA loan.
Okay, 718.
No, 484.
Oh, 484.
Yeah, Eric, 484.
484 SBA loan. Okay.
I tried to make it very simple.
484
Yes.
SBA loan.
Or you can come to our website, and all of our information is there as well, which is SBALoanGroup.com. You asked if anybody could call us. Yes, I would definitely say learn what is available, because unfortunately, when people come at the last minute and they have a crisis, I got to get this done tomorrow, it doesn't happen. And when somebody is in a crisis, a bank can sense it, and they don't want to lend you money. there's a partner I had years ago. He had a great saying: when you need the money, the banks will not give it to you. When you don't need the money, doors wide open. So it's always to understand: get in the door while it's wide open, and once you're there already, you're there.
So, we were going to go to commercial break, but I just got to hold on to this.
Sure. Let's cancel all the commercials.
Question. Let's say there's a company that's doing well, and they're not particularly thinking about a loan, but, they think maybe I want to expand in personnel, marketing, whatever the case is. Is there a certain time frame? So I'm going to split my question into two. Number one is, when do you recommend that someone starts thinking about reaching out to a firm like yours? That's number one. And number two is, actually from experience, what is the normal time frame it takes from when they go ahead and process a loan till they see the money?
Great question. One, I would say any time, and the truth be told, every good business owner should at least sit down by himself or with his accountant and make what we like to call a din v'cheshbon. Right? Actually look at their company, look at themselves, real accounting, and figure out where are they going? What are they trying to accomplish this year? And if somebody wants to do that, how would I grow my business? And they think about that properly, then give us a call and I can tell you what is available based on your cash flow, based on each individual business is unique. And that's what I could deal with two businesses that are in the same industry, and it's worlds apart. We could see that in our children, right? Come from the same exact place. Right. I myself am a twin. I can tell you we're very much alike, but we're very different. So everybody is unique, and it's almost like creating a custom-made suit. You got to take the measurements. One person may be top heavy, one person may be bottom heavy. Some people, not like myself, are very, very in shape. By the way, the camera adds 40 pounds if everybody's watching this.
That's correct. Yeah. Those are watching it on YouTube.
Yeah. But it does take time. A typical loan in our firm takes about 2 months to process. So from start to finish, you're typically 2 months, sometimes 3, but it also depends.
It's still really good. So you're saying 8 to 12 weeks.
The industry standard is probably 8 to 13 months for SBA loans.
So yeah. 8 to, and now we're going to get to a bit later about the strength of going directly to a firm like yours as opposed to trying to navigate Washington directly. My guest tonight is Yankie Markowitz, CEO of SBA Loan Group. Yankie, again, thank you for joining me here on Mind Your Business.
It's a pleasure.
Thank you. Well, if it's okay, we're going to get right into the heart of a key question that I'm sure is on people's minds, small business owners, anyone out there looking to scale and therefore needs extra cash. What's the process of applying for a loan? I know, straight up question, but yeah.
How much time do we have left? We may have to do 2 more shows.
We're ready. Okay.
Yeah, unfortunately, this is a very boring part of the program, I can tell you. The process is quite a process. So I could only tell you how we do it as opposed to other packagers or... You know what? Let's talk about that for a moment. Sure. Historically, like myself, when I was looking for my first SBA loan, I went to a bank and I had a conversation with a BDO. And you have a conversation about what you're trying to accomplish. And he says, just get me the corporate documents.
Right.
And he gave me a checklist of things to do. Right. And I did that. And then he looked at it and he said, that's great. And he took the documents. We'll get back to you. I went downstairs to somebody in the basement because that person did not know anything about the SBA process. Mm-hmm. He did not know how an SBA loan is approved. There's somebody in the basement who looks at the paperwork, and if it's something wrong, they send it back upstairs, go get this from the client, and so forth. So the way we like to have our process handled is first I have a conversation, as I said before, with the client. What are they trying to accomplish? Based off that, I have a certain needs list that I'm going to send to them to look at to see if what they're trying to accomplish can be accomplished. Mm-hmm. And that is simply 3 years tax returns, interim financials, so it's a year-to-date P&L and balance sheet, business debt schedule, personal financial statement, my head's spinning as I'm saying it, and business debt schedule. If they're looking at buying a property, then what is the address of that property? Once we have that basic information and we look through it and make sure that it is eligible, number one. Number two, what has to be rectified? What has to be done to make this more attractive to a bank? And can that be done? Which bank is the right bank for this person? If somebody's looking to, as I said before, no business is created equal. There are no 2 businesses that were created equally. So you could be in the same industry as a competitor, but you're not eligible by one bank and another bank would be interested in your loan. That could be geographical. That could be based on your historical financials. Once we looked that over and we said, okay, this is the path we need to get at least 1, 2, or these 3 banks interested, and ultimately one of them is going to fund your loan, now we could take you on as a client. So we do all that before we even take you on ourselves as a client. Once you have that, you're sent to our packaging department. Every deal has 2 loan officers that are assigned to your case. This, no one misses anything. You could always, talk about it between each other. Is this right? Is this wrong? And if we need to go to the hierarchies, someone come to me, come to my partner. And then there's a packaging department. Also, in case someone's on vacation, just now, one of our loan officers went on vacation, so someone had to pick up the slack. If he's gone and nobody else knows about this deal, then how can you get it processed? Once it's in the packaging department, that packaging department is in charge of collecting all the documentation, all of the information that is necessary, and updating it accordingly. Once that's done, we have a full package with the narrative. We prepare projections and assumptions, send it over to the bank. This is our deal. They have everything at a click of a button. I'd say most of the time, there are occasions that it doesn't happen, but most of the time, the bank never has to come back to us for one piece of document. We even collect closing documents upfront. Once it's approved by the bank and approved by SBA, we then move to the closing department, and then we gather a closing checklist. Like I said before, most of the time we do collect some information for the closing department, on closing items. If there's anything more that's missing, we set that up. That could be insurances, dealing with your attorney or your accountant, and then we take it through closing. And once it's closed, that's when we get our fee. We do not get paid until you close. Yeah, I'm sorry that was very long and boring, but that's my life.
But just to add, I'm gonna say what should be obvious is that by going to SBA Loan Group, the maintenance, you lift the maintenance, you make it so easy for the individual who's applying. Obviously, they'll need to supply paperwork when they're requested of it, but otherwise, all the details is handled by your firm.
Yes, I would say we make it easier. I don't want to pretend that it's the easiest process in the world, but we definitely make it easier, less painful. We have somebody who you can talk to. We all, unfortunately, do not keep regular banking hours. I'm on the phone till late at night with many of my clients, and also many accountants. And I have to give them a shout out because there are very, very good accountants out there, great attorneys who take a personal interest, like our firm, in our clients' well-being and the success of this loan application. And we work very late at night, and that helps us a lot.
Yankie, you mentioned earlier about the Community Development Corporation, the CDC, for a 504 loan. Can you tell us a little bit more about this?
Sure. So what is a CDC? So the CDC is the liaison. In Jewish terms, it's the mashgiach. SBA is the hechsher. The CDC is responsible for overlooking each individual loan before it gets to SBA in the 504 program. So SBA does not have the manpower as anybody with a business who tried to apply for PPP and got stuck, or EIDL got stuck. It's because they don't have the manpower to process every single application. So you go through the CDC first. They are trained and understand SBA, only SBA, that's all they do. And they have to see, number one, you have a bank that's willing to give you their portion of the loan. 2, you meet all of SBA criteria. 3, that there are no hidden secrets in the background checks, etc. And once you meet all of those criteria, all the criteria from SBA, and that's the SOP, Standard Operating Procedure, which is updated every year. We could talk about that later if you'd like. Once they establish that all of this has been met, then and only then do you go to the SBA for its approval. Once the SBA approves it, they come back to the CDC. Nobody gets to speak to the SBA besides the CDC, not the bank, not the client, just the CDC directly, direct communication. So when you're dealing with different CDCs, a lot of them get lost in translation, right? So you have a man on the ground. I myself actually am on the board of a CDC called RBAC. We are the largest CDC in New Jersey, second largest CDC in New York, and I'm also on the loan committee. So I get to see all the loans that come through New Jersey, whether it's mine or not, before it's approved. And I actually have to vote on them to see if it's SBA eligible or not.
Now, this is just a question, maybe out of curiosity. How has the industry changed over the years? I mean, I imagine certainly the last 2 years have upended the norms.
Well, the industry is constantly changing, right? Just like any industry constantly changes, right? E-commerce after the pandemic changed tremendously. Yeah. Thankfully, a lot of our clients were in e-commerce, so that grew well. There are different banks, just to point out with the pandemic. And by the way, SOP, I mentioned that earlier. Mm-hmm. That's the standard operating procedure of SBA, the Bible, if you will. Mm-hmm. 10 Commandments, but with 500 pages. So anybody who learned Talmud would understand it, but that's what it is. And it constantly, throughout the year, they send out updates, and every year they give out a formal update. Mm-hmm. So during the pandemic, as an example, SBA created a whole new questionnaire. Mm-hmm. What happened during the pandemic? What will happen in the future? A lot of banks today, not all of them, but many, still look at that guideline, and they say to one of their questions, if there's another pandemic, how is your business going to be able to move forward? How did you manage over there, and how can you move forward? Because some businesses can't. They just simply have to shut down. Right. But we have a lot of people in the food industry. That was a very good business to be in. Right. You had a lot of people in e-commerce, very good business to be in. Manufacturers, even though the supply chain has been bottlenecked and still has been bottlenecked, they did, thank God, very well.
Just before we go to a commercial break, another question that's on people's minds. You touched on it earlier, but what's the process of repaying the loan? We talked about prepayment penalties, but what's the process repaying it?
Okay, so for the most part, and let's break it down between the two loans. So as I mentioned before, when it's a 10-year loan, if you're doing anything in the 7A program that does not involve a real estate transaction, it's going to be a 10-year loan. And in that process, or in that program, there is no prepayment penalty. You could pay the loan down whenever you want. You win the lottery tomorrow, you want to sell your business, you could pay it down. Okay. The payments work just like a mortgage. Every month, you're going to pay principal and interest. Okay. It's not like a line of credit where you take the money cyclically and pay it back. Every month, you pay down the loan for 10 years until you finish paying them back. Okay. If it's a 25-year loan, same exact principle. Okay. If you if you're in the 504 program, same exact concept, except you have two loans, one from the bank and one from SBA. Mm-hmm. Process is the same. In fact, as I mentioned before, the 40% portion that comes from SBA is a fixed rate for the life of the loan, which is one of the benefits.
Right.
At closing, you get one statement. They'll never send you a bill. That doesn't mean you don't have to pay it. But every month you have to pay the same amount because they know exactly what your payments are going to be for the next 25 years. Right. But the prepayment penalty is 10 years. I'm just reminded of a story if we have time.
Sure.
There was a client of mine, and we gave him a 7A loan. We gave him about $800,000 for working capital and inventory. Mm-hmm. And thank God they were able to build their business quite substantially, where within a year and a half, he moved from a 10,000 square foot warehouse to a 20,000 square foot warehouse to a 35,000 square foot warehouse. And he was growing. An opportunity came up where he wanted to buy a building. I told him, based on the purchase price, which was under $5 million, he should use the 7A program. We have a 3-year prepayment penalty. Right. He wanted to go with the 504. I said, no problem. Go with the 504. It's your choice. My job, as I said before, is to educate you what's out there, and we can make a decision what I think is better for you, but you ultimately make the decision. So we went to 504 program, and he was going from a 35,000 square foot building to a 55,000 square foot building. And we're going through the process. We're about, I'm going to say, 4 weeks away from closing. And he calls me up. He says, Yankie, are you sitting down? I said, do I have to be? He said, I don't know how strong. I have a problem. I said, okay. At this point in our career, we deal with problems every single day. So we don't get phased that easily. And he said, I have a big problem. I'm making a calculation. And we spoke about this before. A good business person sits down and makes a calculation. Based on my growth and based on what we've done in the past and where I see myself in a year, 2 years, and 3 years, in 3 years, I'm going to outgrow this building. And he's moving into another 20,000 square feet. I said, I hear you. So you want to back out of the deal? I can't. At this point, I can't. He loses his down payment. He's hard. We have to close. But what should I do? I said, you know what? Let me think about it. And I'll get back to you and try to figure out some type of a solution. And we came back. I had a conversation with the bank without talking to him first. Right. And I came back and I came with a solution. will have a 3-year prepayment penalty on the 504 loan instead of a 10-year prepayment penalty. I'm sorry, instead of a 10-year prepayment penalty. Yes, exactly.
Because that's realistically, according to projections, when he's going to be ready to the other one, so he wants to satisfy this one.
He said that was fantastic. It worked out great. Excellent. We closed. Not 3 years later, but 3 months later, he called me up. I'm busting at the seam.
Explosive growth.
I have to find something else. Thank God. Yeah. Exactly. Thank God. Everything comes from God.
That's right.
But he grew so rapidly that within 3 months he had to find a new building, and within the year we actually waited the closing for his next building. This building was about $4.5 million. His next building was $10.2 million, and we closed literally 2 days after the first year. So he saved some money on the prepayment penalty, but he had a prepayment penalty.
What a story. What a story. What a story. What is the website and the phone number where people could get in touch with your firm?
I've never said my phone number or website so often. It's SBALoanGroup.com. Again, SBALoanGroup.com or 484 SBA Loan.
This is the type of show that you're going to say, thank goodness it goes up on Spotify and it's going to go up on YouTube, and you can access the show by going to mybradio.com, because we're speaking with Yankie Markowitz, CEO of SBA Loan Group. And we're talking about, at the core, almost every business at some point in its growth, if it's growing anywhere, needs to borrow money. How to do it, how to navigate it, and that it's a complicated field. It can be made much simpler by going to an entity that specializes in this area, and that's why we wanted to have Yankie Markowitz, CEO of SBA Loan Group, on the show. Thank you, Yankie, again for joining me here on
You're
Mind
very,
Your Business.
very welcome. I always wondered when you watch an interview,
right,
and they go to commercial break, and the host leans over and they start talking, and you don't get to hear what they say about it. I wonder, if you guys want to see, you got to watch behind-the-scene footage, but a lot happens.
It's really, we're able to release it? Okay. So, Yankie, let's go straight to a key question here. Tell us why it's so critical for an entrepreneur, small business owner, even a large business. They're looking to scale, and they're saying to themselves, I could just go to the Small Business Administration, to the website. I'll Google their website. I'll find it. What's the advantage of going to SBA Loan Group over trying to do it yourself?
So that's a great question. You actually, in that question, you mentioned, why can't I just go to SBA by themselves and apply for it? Yeah. And there's a lot of confusion with that because of the EIDL loan. A traditional SBA loan is done through a bank. As I said before, the CDC communicates with SBA. You never do. A bank is the one who lends you the money. The SBA gives the bank a guarantee that if you default, they're going to pay back X percentage of the loan. The reason why it's important to go to a broker, and I could talk about my own experiences, number one, particularly SBA Loan Group, we only deal with SBA financing. That's all we do. You want to come to me about your refinancing your house? It's not me. We specifically live and breathe this every single day. Now, that question has been brought up to me many times, and a good example is when somebody, God forbid, has to defend themselves in court, whether it's a traffic violation or, God forbid, something worse. The law allows you to represent yourself, yet people take attorneys. Why? Because you may say something that you shouldn't. You may point light on something that you really shouldn't, and point light somewhere else would be a lot better for you. Same as with a broker. And I myself, when I go to buy a property, I always use a real estate broker. I have connections with 50, 60 banks out there, personal connections. I could call up the CEO. I don't do that. I go to somebody who specializes in that field, and in this case, it's us.
Now, what makes SBA Loan Group stand out in the marketplace?
So as I mentioned before, we have the SOP, which comes out throughout the year, and then it's updated yearly. In addition to that, I myself, I interact with SBA. I look at hundreds of loans that are not my clients throughout the year on loan committee. I know what SBA is looking at to see when they approve a loan and when they do not approve a loan. I know what makes a business look good and what makes a business look bad. I know which banks are interested in. I'll tell you a very quick story.
Sure.
If I can.
Sure.
There was a deal I saw. I was on loan committee, and there was a deal I saw, and I look at the name, it looks very familiar to me. And then I realized it's a few blocks away from my office. And they were buying the building that they were located in. It's like, wow, divine providence. And I look at their financials and I see things that shouldn't have been so great. But it was good. But people had questions about the area. Happens to be, I'm 3 blocks away, so I was able to answer the area.
Right.
And I saw the bank who was financing the deal. So after the loan committee, I called up the loan officer. I have a relationship with him. He lives in Hawaii, believe it or not.
Wow.
And I said, Mazel Tov, I approved your deal. And he says, Yankie, what are you talking about? I have 0 deals with you. I said, no, you have this and this deal. He had no idea what I was talking about. So I explained to him the details. He goes, we're not doing that deal. We already decided that we're not doing that deal.
And it had just been...
And this came to the loan committee. As I said before, you have to have a sponsoring bank, because what happens, you go to a bank gives you a letter that they're going to do, they're interested in doing this loan, and that's good enough for the CDC. And then it was going on to SBA, but in the meantime, this client, it's not my client at the time, has no idea that he does not have a bank in place. And he's going to go to SBA and hopefully get approved. We could talk about that as well.
Right.
But he doesn't have a bank in place. Now, what do? There's a conflict. I cannot call up the client myself. But this happens more often than not. And I know myself, in 2-3 weeks, I'm going to get the call. The emergency. I need a bank. Why didn't I go to you before? And that happened. I got a call. I remember where I was. I was in traffic right before the Holland Tunnel. And I was like, I'm going to meet a client. I'll get to you tonight. Long story short, we had to find him a new bank. We had to answer all of his questions. The SBA came out, which is called a screen out. We live this, breathe this. I know what works. I know what doesn't. By dealing with our company, and I don't want to put any shame or disrespect on the other broker, but the other broker is a great broker when it comes to investment properties, not an SBA.
So this really even brought out another question that I had of like, what's the advantage of reaching out to, let's say, SBA Loan Group over their local bank?
Yeah, so your local bank, as I said with the story of myself,
right,
the local officer does not necessarily know SBA. He knows there's an SBA out there, just like all of us. We know which bank is the right bank to go to, which bank is going to do your deal, or which bank is interested in doing your deal. Sometimes banks are low on loans for a year, and I don't want to say desperate, but they're interested in and they'll be more lenient with a new loan, with your loan. So you have to go to that bank. Number 2, you have to prepare it properly. SBA has a format that they're used to, right? When we pray, everybody has, you have Nosachari.
Right.
Everybody has their own format. What is the right format to help you get your loan quicker in a timely fashion? And that's what we do.
Now, Yankie, you have worked with many successful businesses over the years. You've dealt with many loans, different types of loans. Can you share your thoughts on, I guess, how to measure success?
How to measure success?
I know, it's kind of an open question.
It's a very, very good question. It's a very good question. Most people are going to look at a dollar figure, a number.
Right.
How many?
I was able to get X.
Yeah. How much money? How many employees do I have? How much real estate do I own? I'm reminded of a story of my father.
Sure.
We're by Havdalah, right? After Shabbos,
right,
we're saying Havdalah, and there is a skula, there's a good omen. Right. Everybody knows, or many people do. You dip your fingers into the wine and you put on your eyebrows to make help you get smart, and put in your pockets to help you Parnasa, wealth.
Yeah.
And for some reason, I don't remember what it was. I don't remember the exact detail. That part wasn't important. My brother did something new.
Okay.
I also looked at what? And he said he heard this Kabbalah, something based on Kabbalah. If you do this, it's also a good omen for wealth.
Okay.
So my father said, it's a good omen for wealth? I'll say it in Yiddish and I'll say it in Yiddish. Als man steht auf in der Früh und man geht arbeiten schwer und hat's betochen in der Eibester. It's a school for Ashiras. He said that, just to translate, for those who do not speak Yiddish, that when you wake up in the morning, and you go out and you work hard, you give it all you got, and you understand that you're just creating a vessel to hold the wealth, and it's all up to God, and you do that consistently, that is a good omen for wealth. So I would say that somebody who does that, somebody who's out there and working, as I said before, every quarter, he looks at his company. Where has he come from? Where is he going? What is his goals? Another thing I would say is someone successful that you could hand over the reins. and I learned this myself. Most people believe that they are the best at what they do. I do believe I'm the best at what I do, but it's my company. The company, we're the best company at this process. Mm-hmm. So if somebody can understand that they're not the only person in the world, it's a little bit of an egotistical problem. Hand over the job to someone else. Focus on what you have to focus on. Manage your team properly. I think that's successful.
So, Yankie, here's an interesting question, and that is, I mean, you review from your own company, and also by being on the board, you see thousands of loans. What's a tip that you could share that, I guess, from some of the mistakes that you see from when businesses apply for a loan?
That's a great question. I could tell you that I see many businesses are many businesses are repeat customers, right? I have clients that I've done 4 or 5 loans for throughout the years and throughout 5-year, 6-year span. Mm-hmm. I'd say one of the biggest mistakes that I find people make, myself included, and we all have these stories, is they do not act quickly. Mm-hmm. Not only do they not act quickly, they're looking for everything has to be the best. Everything has to be the best. And as you get older, you realize in life, everything isn't always perfect. So they're looking for the best deal, the best financing, the best rate, and they lose that on an opportunity. I could tell you that every single one of my clients from 2012 to 2018 who bought property and didn't care about the rate, said, I want a property, I have to buy a property, I have to make the move. And back then, the rates were very high. They weren't as they are today. Some clients were paying 7.5%. The story I mentioned earlier,
right,
it was a 5.85% rate. Today, that sounds astronomical, but it's not. And they bought it. Today, those properties are triple, quadruple in value. Quadruple.
Great point.
They make, and ourselves included, how many people, you could sit in Shul, you could sit in the restaurant, you could sit on the train. Just turn over somebody. You ever miss out a real estate opportunity? And every single person has a story. If I only, and myself included, whatever I invested, I recently bought property. I could have bought it a year ago for cheaper, or 2 years ago. So I think that sometimes people wait for the perfect. It's also not just in a property, or not just your financing terms. Could be on inventory. We saw in the pandemic, anything you had sold. That doesn't mean you have to go and buy everything, but sometimes people wait and waste too much time thinking about, the rate is a little too high. I should wait till I'm more eligible. No, then go for the higher rate, get the deal done, and figure out how to get out of it afterwards. As I said, in the 7A program, for example, the prepayment penalty is only 3 years when you're buying property, and there is no prepayment penalty. So go in, leave it if you don't like it.
Great point. Great point. Before I get to just a final closing question, although you touched on it, I mean, you shared such a great tip just now. How can people find out more information, your phone number, and your website?
Sure. Our website is SBALoanGroup.com or 484 SBA Loan. That would be 484-722-6526.
So, Yankie, just before I let you go, perhaps you could share just a tip for all the small business owners out there, for all the entrepreneurs, anyone who wants to go up on, just continue on their trajectory of success. Just a tip, a closing thought on how to be successful.
Closing thought on how to be successful. I can't reiterate it enough of making a calculation as to what you've accomplished. Did you accomplish everything you wanted to accomplish? And how do you go forward? I would say of another good, take away business for a moment, even though it's all related to business.
Yeah.
I think personal happiness is very important. And for most people, it's family.
Right.
You have to make time for family. Beautiful. And I'm not saying, because I don't do it, I should, but you come home.
Family might be tuned in,
I know. But you come home, it could be an hour, it could be a half hour. Turn off your phone or put it on silent. Beautiful. I know it's hard to turn off your phone, but you have to look at the corner. But spend some time with your family, your children, because time flies. We all know that. Time flies. And I think that is very important. And if you're happy at home, you're happy in business.
Right.
And I think that translates. I think it one corresponds with the other. I know there's some people come home 5 o'clock, 6 o'clock, phones. I can't do that, so I don't suggest it. But There is always a half hour, an hour. It could be bedtime. Read. Ask your children how your day was. You want, when you walk through the door, someone to ask you that. Reciprocate.
Very special. Very special. Thank you for watching, and make sure to subscribe to this channel and be notified every single time a new video goes live. Don't miss out on any of the weekly interviews that I have with top business leaders, sometimes Fortune 500 executives. Hit subscribe and turn on notifications.